All right. Oh, also, just so you guys know, I have begun working on a little project to help you get back some exam points. It should be done by today, and then I'll give you some instructions on it if you want to do it. And it's not required. Like if you're like, oh, it's pretty solid with my exam grade, you don't have to. Also, if you're like, I'm solid with my exam grade, but I still feel shaky on that, and I just want to go through it to review it, you can do that too. Because you're grown adults, you can make your own choices in life. Sometimes you'll make choices that later on you'll look back and think, that was a good one. And other times you'll look back and think, that was dumb, like that, right? And don't worry, you don't outgrow it. Like I'm 50 and I have decisions that I'm like, I made when I was 45 and I think, by then I'm pretty grown up. I shouldn't be making stupid decisions. And I look back on them and think, yeah, I probably shouldn't have done that. So you never outgrow being stupid. All right. Even when you're smart. All right. You guys ready for this? So we have taxes. Yeah, they kind of suck. I hate taxes, but I like nice roads. I hate taxes, but I like knowing the food I eat isn't going to kill me. I hate taxes, but I like people having a good education. So what am I supposed to do? I guess pay my taxes and just be grumpy about it. Or I could choose to find joy in that $12,000 payment to the government each year, or whatever it is. It's about that for me. So because I'm rich, that's not that much, just so you know. Um, they just take it out of your paycheck. You're like, bro, like that every time. All right. So here's the thing about taxes. From a business standpoint, when we're paying our employees, taxes work like this. The employee has to pay certain taxes, and the employer has to pay certain taxes. The taxes that the employee pays are still collected by the employer. So like if you ever had a job and you see like money held out of your check, it's called withholding. And what it means is that the employer is taking that money and sending it into the government on your behalf, right? So it doesn't actually belong to the employer and it's not a payment made by the employer. So the taxes that you have to pay in the United States as an employee are Social Security tax. Sometimes you'll see it on your paycheck as FICA or FICA. Okay. That's just taxes that are meant to go into a fund that then when you get old, it will pay you a certain amount. It's not a lot, by the way. As I'm getting closer to the age where I'll collect Social Security, I'm like, you held that much on my paycheck to pay me $900 a month? Bro, if I'd invested that, I'd have done way better. But that's what it's for. And the reason it's not all there for me, right, is because some is used to help people who are disabled and other things like that. So it's not truly an investment account, it's a tax. So Social Security or FICA, you'll see it called Medicare, which is kind of like old age insurance, health insurance. So again, when you hit that retirement age, you're paying into that. And then what's called federal withholding, which means federal tax that you owe, just your federal income tax that the employer is holding out of your paycheck for you. And it doesn't have it on there, but there's also state withholding in states where they have state income tax. Arizona is a state that has state income tax. Texas doesn't have state income tax, but sales tax is way higher there. So there's trade-offs, right? The government's going to get theirs, is what that comes down to, one way or the other. All right. So this is what the employee pays. And then the employer also has to pay Social Security tax. So any amount like that you have to pay, the employee's matching it. In essence, what the government says is you have to pay 12.6%. The employer pays 6.3. And sorry, the employee and the employer each pay 6.3 is how it works. Medicare, and then there's something called federal unemployment compensation tax and state unemployment compensation tax. And this is like a fund that the employer has to pay into. Each time you earn money, the employer has to pay a percentage of that. And then if something happens and they lay you off, you can go apply for unemployment, which will pay you a certain amount for the next usually I think it's up to like 13 weeks, generally, something like that, that you can collect unemployment while you're looking for a new job. So I know everybody's like, I don't really care that much about the purpose of these. I really need to know for this class, how do we account for them, right? Like that's a little different. So just know, typically, that's what the employee pays, that's what the employer pays. All right. So employees have something called gross pay, which is just their hourly rate of pay times the number of hours they worked, right? Um, and then we take out all the deductions, all the things that the employer is going to withhold from their paycheck and pay to the government, or sometimes other things like insurance, they're withholding that from your paycheck and then paying it to the insurance company. So all net pay is your gross earnings minus all the deductions gives you net pay. Okay. Anybody ever have that with like your first time you got paid when you're like your first job and you're expecting more because in your head you just calculated your hourly rate of pay times the number of hours you worked, and then when you got your paycheck it was sad. It's like what? Yeah, it's even worse if you work for like a college, just so you know, because we have to participate in our state retirement plan, which takes 11% of our pay. So it kind of kicks you in the teeth the first time when you're not expecting it. When my daughter became a teacher, I was like, okay, I just want to prepare you for this. There's going to be an extra 10% taken out of your paycheck, 11%. But now, after 23 years of working for the college, my state retirement plan is like my biggest asset. It's worth more than my house, right? So they forced me to do it, but in the end, I'll actually be able to retire someday. So maybe it was good. So let's take a look just at figuring out that net pay on the guided assignment. All right. So here is guided assignment, chapter 10, part 1, number 1. An employee earns $30 per hour and 1.5 times that rate for all hours in excess of 40 hours per week. That's standard. That's the law in the United States, federal law. If your employees work more than 40 hours in a week, you have to pay them time and a half, or their regular rate plus half again as much. Okay. If the employee worked 54 hours during the week, assume that Social Security tax rate is 6%, Medicare tax rate is 1.5, and the employee's federal income tax withheld is 295. So first they want us to determine the gross pay. So the way that works is we would just say, okay, so the employee worked 40 hours times the base rate, which was $30 per hour. How many of you are making $30 an hour right now? Someday you will. I believe in you. Hopefully way more than that, but all right. Plus they worked 60, was it 56 hours or 54? Plus they worked 14 hours at the overtime rate. And the overtime rate is 1.5 times the base rate. So 30 times 1.5 would be 45. So that's how we calculate their gross pay. The first 40 hours in the week are always at straight pay or their normal pay rate. And anything over 40 hours is at time and a half. Not for this class, but in real life, some states have laws that say anything over 8 hours a day, you have to get paid time and a half for. But Arizona is anything over, they just go with the federal law, which is anything over 40 hours in a week. So that comes out to, what, 450 plus another 180, 630. Anybody do it on their calculator? Check my math. That's right. Okay. Sometimes I rush and make mistakes. Maybe that never happens to you. I always hope it's on something like math and not like in driving, right? You rush and make a mistake. You know you've done it. Should I go through that yellow light that's about to turn red? Should I lock it up, even though I have pizza sitting here on the front seat? I think saving this pizza is worth a few people's lives. right? Like that sort of decision. All right. Determine the employee's net pay for the week. So the net pay then is just the gross pay minus any deductions. And this tells us we have a 6% Social Security tax. So 6% of that, we would just say $1,830 times 0.06. Oh man, round your ends. I don't want to do decimals. So our Social Security tax is $109.80. And our Medicare tax, so again, we just take the $1,830 times 0.015 is $27.45. And then finally, the federal income tax is $295. And then we just subtract all that from 1830. That gives us our net pay. So hopefully what you're thinking right now is like, oh, well, this isn't rocket science. Like this is pretty doable. So $1,830 minus 109.80 minus 27.45 minus 295. I get 1397.75. Check my work. All is good with the world. I find joy in the sound of birds singing and children's laughter once again. Yes. All right. Okay. Pretty straightforward. Pretty easy. Yes. Yes. Kenna's like, I asked, is that pretty straightforward and easy? And Kenna gave me this I hate you look. I'm not sure what that is, Kenna. She's just like, it's a great sign when you're a teacher and you look up and your students are like, hope he gets hit by a bus. All right. That's a terrible thing, by the way, guys. You should never hope that for your teacher. Because I care about you and I want you to have a good life. All right. So I mentioned FICA, FICA. That just means Social Security. So again, we kind of did it already on this problem, but a lot of times for these problems, they'll use 6%. I think it's like 6.2 right now. I'd have to look it up. It adjusts periodically, and I don't keep up with it because I don't do payroll. So again, all you do is you take the gross pay times the percentage, right? And that's how you figure out how much the Social Security and the Medicare taxes are. So when we actually go to record the payroll in our books, remember, we're accountants here, so we have to do journal entries, and it can get a little confusing. We typically record, well, it depends. Most software now will record each paycheck individually, but the sort of the traditional way is to just lump all payroll together into a single entry. So I think that's kind of the way they're going to do it here. So here's McDermott Supply. They have on March 21st, they have $20,000 in sales salaries and $5,000 in office salaries. The salaries are subject to the following payroll taxes. All $25,000 of those salaries are subject to Social Security and Medicare. And then 10,000 are subject to state, federal, and unemployment tax. The reason sometimes not all of the salaries you pay are subject to state and federal unemployment tax is because those taxes usually are only on the first a first certain amount of earnings that people have had. So like once you've earned more than $10,000 in a year, then you don't have any more unemployment tax on that. It's like a certain percentage of the first $10,000 you've earned. So that's why. So all you do is you calculate out all your taxes, right? Social Security tax 6%, Medicare 1.5%, state unemployment 5.4%, federal 0.8%. And you just multiply that. Take the gross amount, 25,000 times 6% gives us 2,100, etc. Okay, so again, None of that's crazy hard math. It's just making sure you apply it. So here's what our journal entry will now look like. We'll debit the expense accounts for sales salaries and office salaries. In real life, some people just have a single account, like wage and salary expense. Others like to break it down to separate their different areas. And that's just a management decision. So in real life, it could be, again, you kind of get trained when you get hired somewhere as an accountant as to what they do there. Okay. And then you'll notice all those numbers they calculated get credited as payables. Payable means liability. And it's because as the employer, you're withholding that tax out and you're going to have to pay it to the federal or state government at some point in the future. For small businesses, like my wife's business, we only pay those payments to the government once a quarter. So we just withhold that out, keep it in a payable account, and then when it comes time to pay it, actually, one of the federal withholdings you have to do monthly, and then the others are quarterly, just to make it more complicated. Instead of like, I just do all of it on one day. Oh no. All right. So that's what it will look like. We debit the expenses. We credit all of these: Social Security, Medicare, employee federal tax payable, employee state income tax payable, retirement contributions, charitable contributions. And a problem, we'll have to tell you those amount. And then the difference between the salary expense and all of the withholdings is salaries payable. That's the amount of cash you're actually going to pay your people on payday. It's very common to do this entry like the day before payday and then the next day to actually make the payment. With computers now, we tend to just do it day of payday and put that entry in. Or you can actually create an entry and then set it in advance, right? And then it will go into the system on that day. And if you have consistent payroll, like if you're a business that pays salaries to everybody, you just set up what's called a repeating transaction in the system. And so like every 1st and 15th or whenever you do your payroll, it just pops up. Do you want to do this entry? And yes, it's done, right? All right. So let's look at a payroll entry, question number 2 on our guided. All right, so this is a payroll register for the D Sala company for the week ended May 18th. So they're a good size of company apparently, because their salaries are $615,000 a week. So yeah, they're not small. And their federal income tax that they withheld is 165,000. The salaries were all subject to 6% Social Security tax and 1.5% Medicare tax. In addition, state and federal unemployment taxes were calculated at a rate of 5.4 and 0.8 respectively of the $45,000 salaries. So we're going to do a compound transaction, meaning we're going to do all this together in one journal entry. Okay. So let's see, journalize the entry to record the payroll, journalize the entry to record the payroll tax expense incurred for the week. All right. So what they're getting at here is, remember I told you there's parts of this that the employee has to pay and parts that the employer has to pay. So we often do 2 different journal entries to show that. So follow along with me here. We're going to do salaries expense, 615,000. So that's the gross pay, right? That's what people have earned. And then we're going to do Social Security taxes payable, Medicare taxes payable, state unemployment taxes payable, and federal unemployment taxes payable. Social Security is 6% of the 615,000. Which is 36,900. Hold on, something feels a little off. Okay, our Medicare taxes are 1.5%. So the whole 615,000 times 0.015 or $9,225. State unemployment tax, it says 5.4% on $45,000 of the salary. So I'm going to take 45,000 times 0.054. So again, you have to pay attention and read it carefully because not all of the salary is getting charged these unemployment taxes, right? So I got 2,430. And finally, the state unemployment tax, which is 0.8% on $45,000 of the salary. So I'm going to say 45,000 times 0.008 or 360. Uh-oh, did not like, did I do it? Let's go like that. Oh, okay. Here's what I'm doing wrong. I didn't remember, I was overthinking that the unemployment taxes are paid by the employer. When I showed you the thing at the very beginning, and I was like, this is what's paid by the employee, this was paid by the employer. Unemployment taxes are paid by the employer. Okay. So this first entry is us doing what the employee has to pay, which is their Social Security, their Medicare, and their federal income tax. And then we're going to do payroll, we're going to do salaries payable as the final credit so that we can make this journal entry balance out, right? Amount we're actually going to pay out to the employees, which is actually what I just went through with you, but I overthought it. So again, all we do is take what we have on the debit side, 615,000, subtract what we already have on the credit side, 36,900, minus 9225, minus 165,000. And that gives us the amount now we're actually going to pay to the employees, which is 403,875. So if we were to sort of break down this transaction, we could say we've incurred $615,000 in payroll expense, which is just the gross amount we have to pay our employees, their earnings times, or their hourly earnings times the number of hours they worked. But then we're going to withhold from their paycheck to pay to the government 36,900 in Social Security, 9,225 in Medicare, 165,000 in federal taxes. And so the difference here is the amount that the employees are going to actually get paid, their net pay. So this first journal entry, and you'll see in these problems, it's always like this, is what the gross pay minus all the things that the employee has to pay that we're withholding for them. The second entry is going to be our payroll tax expense. These are the taxes we have to pay, okay? So we're going to debit payroll tax expense, and then we're going to credit all the different things that we're going to have to pay. Remember, I said both the employee and the employer have to pay Social Security tax and Medicare tax. And then the employer also pays the state unemployment tax and the federal unemployment tax. And that's what I got confused when I went through it first. So again, that 6% that the employee has to pay in Social Security, the employer has to pay an additional 6%. So they're going to be paying another 6%. So I can just take the same amount from up here, 36,900, or I could calculate it again, which would be 615,000 times 6%. There's Medicare. And then our state unemployment is going to be 5.4% times $45,000. Ooh, or $2,430. And our federal unemployment is going to be $45,000 times 0.008 or 0.8 of 1%. I think that's what it was, right? Yeah. So that's all the taxes I have to pay as the employer. You see, they also go to payables so that then at the end of the quarter, I can write those checks to the government, right? Both what I've for Social Security, both what I've withheld from them, from the employee, and what I have to pay together makes the total amount that goes to Social Security. What I withheld from them for Medicare, plus what I have to pay for Medicare, that goes, and then the other thing. So we're going to add those up to get the amount of our debit because debits and credits always have to balance. And there we go. All right. Sorry, I didn't mean to throw you guys off a little bit there in the middle. Maybe I did. Maybe I was testing you. Maybe you have been measured and weighed and found wanting. I don't know. That's from A Knight's Tale. It's old, but it's dope. Check it out. Heath Ledger. Have you ever seen anything with Heath Ledger that wasn't amazing? Except maybe Brokeback Mountain. But I think that was amazing. It won like awards and stuff. It's just, you know, I wasn't expecting that. All right. You got to warn a person. So again, this is what we just sort of went through. Right? We're debiting that tax expense, crediting all the payables for ours, the employer's payroll tax expense. So we just did question 2. And now we're going to do a kind of like a broader, more comprehensive version of it for our last problem. All right. Oh, see, look at that. That's a big, beefy problem. Yeah, we won't get back into the whole beefy thing. That was a bit much. All right. So we do the following information about payroll for the week ended December 30th was obtained from the records of the same company. We have the salaries, we have deductions, meaning sometimes employees choose to have money held out of their paycheck for things like retirement, or in this case, purchasing savings bonds. I mean, whatever. Okay. Then we have tax rates. It gives us that information. And now it says, assuming that the payroll for the last week of the year is to be paid on December 31st, journalize the entry on December 30th to record the payroll. They're telling us that so we don't try to debit like or credit cash for the amount we're going to pay out. Instead, we're going to credit salaries payable, right? It's because it's the day before. That's what that info means. All right. So journalize the entry to record the payroll. And then payroll tax. Okay. So let's go ahead and start with this one. Oh, there goes Chris. So we're going to debit our, is it sales salaries? Sales salaries. Okay. So we're going to debit sales salary expense and debit warehouse salary expense. And that's those gross amounts. Oh, and office salaries. So we have three different categories here. Office salaries expense. Sales salaries were 625,000. Whoops. Warehouse 240,000. And office salaries 320,000. Again, probably not a small company if this is their weekly payroll. So once we've done that, now we've got to deal with the withholdings, right? The money that we're holding out of the employee's paycheck because the employees need to pay it. And so that's going to include our employee income tax payable, our Social Security taxes payable, our Medicare taxes payable, and then we also have, let's see, savings bonds and group insurance. Does it say? Yeah, so the employee is paying for the insurance. So we're going to have savings bond deductions payable, group insurance payable, and finally we'll credit salaries payable, which would be the amount of actual cash we're going to pay out tomorrow on the 31st. Okay. So again, we have to do the math for some of these. So income taxes payable, it's given to us right here. Income tax withheld, 230 to 260. So we'll credit that. Social Security is going to be 6% of this total gross pay here. So I'm just going to add those up, 625,000 plus 240,000 plus 320,000. So that's our total gross pay. Might save that in my memory. Times 6%. So our Social Security tax is payable, 6% of our total gross pay, or 71,100. Medicare is 1.5% of our total gross pay. So again, I just take that total gross pay, 1,185,000 times 0.015. Whoops, if I could type today. And I get $17,775. The savings bond, they're given up here. So we withhold $35,500 to buy savings bonds for our employees. And then group insurance was given again up here, 53,325. And then again, if you ever get here and you're like, I'm not sure I remember what to do, just make the entry balance, right? So we have a certain amount on the debit side minus a certain amount on the credit side, and that'll be the amount we have to credit salaries payable in order to make the whole thing balance. So I'm going to go 625 plus 240 plus 320 minus 32,260 minus 71,100 minus 17,775 minus 35,500 minus 53,325. So the amount of actual cash I'm going to pay out to my employees on December 31st was 775,040. So again, all we're saying is my sales people earned this much. My warehouse people earned this much. My office people earned this much. I withheld income tax, Social Security, Medicare, some money to buy bonds and some money to pay for insurance. And the difference is the amount of cash I'll actually pay out to them. That's it. So check our work. There we go. Then it also says, assuming that the payroll for the last week of the year is to be paid December 31st, journalize the entry to record the employer's payroll. Of the total payroll for the last week of the year, $30,000 is subject to unemployment compensation taxes. So to make our payroll expense the amount we're required to pay out of our pocket for our employees' work is going to be our Social Security taxes. Oh, sorry. No, we're going to debit salaries expense, or sorry, payroll tax expense. And then we'll credit Social Security taxes payable, Medicare taxes payable, state unemployment tax payable, and federal unemployment taxes payable. Always when we do this, the Social Security and the Medicare are going to be an equal amount to what the employee had to pay. So we can just come up to our previous entry and say we paid $71,100 in Social Security. So we can do that again here. In essence, the way Social Security works is half of it's paid by the employee and half of it's paid by the employer. You can say to do the same thing for Medicare. We see that we did 17,775 up here. And then for the unemployment tax, we come look at the rate up here. So state unemployment, 5.4%, times the amount that's subject to the tax, which it tells us here is $30,000. So I just take 5.4% of 30, what was it? 30,000. Oops. Times 0.054. And I have to pay $1,620 in state unemployment tax. And then it's 0.8% for the federal unemployment tax. And remember, it's 8% only of the amount that's subject to the tax. So for this problem, it's $30,000 times 0.008, which is 240. And then I just balance the debits and credits on the journal entry in order to finish the journal entry, right? Which, so I'm just going to add up all those credits, and that'll be the debit to my payroll tax expense as well. 71,100 plus 17,775 plus 1,620 plus 240. So the total payroll tax expense is 90,735. All right. So now they're going to make us do all this again, changing the only condition they're changing is that this is for payroll that will be paid on January 4th rather than on December 31st. And because it's being paid into the next year, a higher portion of the salaries will be subject to the unemployment compensation taxes. Because unemployment tax is like you pay that amount on the first so many dollars of somebody's earnings. And so everything else will be the exact same. So when we're doing the payroll, it's going to look exactly the same as this first payroll. Kind of stinks that they're making us do it again, actually. But sometimes they'll do that. They'll just change like one little variable, and then I'll try to show you how things are the same and how they're different. So again, we would have the sales salary expense, the warehouse salaries expense, and the office salaries expense. And then we would have employee income tax payable, Social Security taxes payable, and Medicare taxes payable, and then savings bond deductions, group insurance payable, and finally, salaries payable. So that's So to enter the entry for the employees, what we're going to withhold from them is going to look identical whether we're paying them on January or December 31st or January 4th. Because the only thing that's going to change is the unemployment tax, which is the part the employer pays. So this one, again, it's going to be the same information, 625, 240, 320. And then even the taxes, the income taxes, the same 232, 260. Social Security tax, we could, if we wanted to, take that total, multiply it by 6%, right? That's how we would find it. I would take, that's the total of the three salaries expenses times 0.06, which gives me 71,100. But again, I don't have to do that because I've already done it up here and this is identical. So I can just, in essence, copy and paste all that down, 17,775. Savings bonds, 35.5. Group insurance, 3,325. And salaries payable, 775,040. At which point you could be like, I got an A. I don't need to do any more of this stupid problem. But I know you guys, you like to get it done. So in the last 3 minutes, let's do it. Everybody good on this part-ish? Just scroll up and copy from above because I'm moving on. All right. So assuming the payroll for the week is to be paid January 4th, record the employer's payroll taxes, blah, 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 just like we did before. But because it's a new fiscal year, all 1,185,000 in salaries is subject to unemployment compensation taxes. So this will look different than by us debiting still the same accounts. Okay. So it's going to be payroll tax expense, then crediting the Social Security taxes payable, the Medicare taxes payable, state unemployment taxes payable, and the federal unemployment taxes payable. The Social Security is going to be the exact same as it was before when we did this, 71,100, which is 6% of all of the total payroll. The Medicare is going to be the exact same, 17,775, which is 1.5% of the total payroll. But now for the state unemployment and federal unemployment, instead of up here where we use 30,000 times the rate of 5.4% and the rate of 0.8%, now we're going to do the full amount, 1,185,000 times those rates, times the state rate, which is 5.44%, or 63,990. And 1,185,000 times the federal rate, which is 0.8% or 0.008, which is 9,480. Then all we got to do, balance the journal entry, right? Add up those credits and that'll be our debit to payroll tax expense. $162,345. And that's it. So the hope is that these last chapter and this chapter are a little easier than before, which will maybe give your brain a little time to think. And like I said, I'll have that exam. I don't know what I'd call it. It's kind of like an assignment that we're going to use to review those concepts that everybody kind of consistently struggled with on the exam. And then I'll help you get some points back on that exam. All right. I'll have that ready for you by tomorrow. Have a great day. I don't know what else. Be good. Be kind. Be great. Yeah, not good. Be excellent. Let me stop recording.